Hello, hello, hello. How's it going, everyone? Just give it a second whilst we let everyone join. Got to let everyone flock in from Zoom. Um, how's everyone doing? Everyone have a good one? Let me know in the chat or the Q&A if you can hear me. And those of you that are also using Discord, let me know in the webinar chat. Good morning, everyone. How's it going? Yeah, perfect. Everyone had a good month? Good trading month, January? I personally had a bit of a choppy month. Don't know how you guys went. But obviously today, so we're going to be kicking off today's webinar with we're going to obviously go over the recap competition that we did in Discord. I'm gonna it's pretty close between the winners, so we're going to put out a poll later to see who you guys think should be the definitive winner. And we're going to go over some of the recaps. Then obviously we've got the special guest of Umar Ashraf, and he's going to come over and talk about his game plan going into the rest of the year. Good. Glad to see so many you are doing well. Oh, and here he is, man himself, Umar. Hi, Umar. How's it going?
What's going on, Josh? How you doing?
Yeah, I'm good. You?
Good.
So we got a bunch of people here. So as I say, first things first, we're going to obviously wrap up and go over the TradeZilla recap competition that we had in the Discord. For those of you that don't know, we spent an entire month where we ran a competition to win $500 and a year's free of TradeZilla. And the idea was essentially to consistently post your recaps to sort of build those habits of, consistently journaling and holding yourself accountable. So yeah, obviously I want to just say a huge congratulations to everyone who participated, whether you ended the month red, green, or break even. The real win was obviously just showing up, journaling, and improving your training process. And I think everyone can agree that one of the biggest takeaways that everyone got away from this was obviously accountability. We even saw from some of these recaps, some traders even comment on how that this is one of the best months that they had in growth. Like they've been trading for five years and they haven't had this much growth until actually this month in the competition. So as you can see here, so here are some of people's monthly recaps. People going over their risk management, their things to improve. You can see all the good comments here. The sort of winners that we've got to go over. So what I'll do actually is I'll post it in the Discord. What do you think about? Shit, I'll post a poll in the Discord. What do you think about that, Umar?
So just to add on to a few things you said, Josh, about the challenge, I think just overall stepping away and stepping to the side, just having that accountability element of knowing that you're recapping your trades, journaling your trades, reviewing, certain things in your trading that, for myself, at least in the past X amount of years, has made the biggest improvement. Even now, knowing that, hey, like when you take a trade and you have to put it somewhere and you have to review it and you have to hold yourself accountable, it kind of makes your initial process of taking a trade so much better because you're like, this doesn't really fit my playbook. What if I take this trade and I kind of mess up my stats? You start thinking about a trade from an intentional point of view. That's why like the idea of the whole challenge was for us to kind of force you guys in a way to start looking and reviewing into all that. And obviously, as Josh mentioned and so many other people have mentioned, this has been a great month for people. And just for context, a great month doesn't always mean profitable, guys. A great month could mean, hey, I've learned X, Y, and Z about myself. I've learned X, Y, and Z about my strategy. I was able to be more patient. I was able to execute more. I was able to take higher quality setups. I was able to keep my risk consistent. There's other wins that I think in the first 3 to 6 months for developing traders should focus more on, which I'll talk about in a bit, than like just was I profitable or was I not profitable? And with that being said, I think phenomenal stuff from a lot of people. Great feedbacks. I went through a ton of feedback. There are people that obviously need some improvement in terms of just structure, but outside of structure and just kind of the context, I think that was phenomenal. And yeah, to Josh's point, I think we did have kind of two clear winners And I think instead of us deciding, we were like, hey, we'll put it in the Discord and let you guys kind of decide.
Yeah, I think that's the best way to do it. I think another thing that we took away from this as well that a lot of people commented on was obviously trading is quite a lonely game, and obviously opening you guys opening up with each other and sharing your recaps sort of made it, that community side. It it took away that loneliness of it, and because you were also open with each other, you got feedback on when you messed up and all that kind of stuff. So that was really great to see as well. But some of the sort of top things that I took away when I was reading everyone's sort of recaps, where people are struggling, I noticed a lot was execution, which obviously I'm sure Umar would agree is a massive thing in trading. Execution was, some people were getting too aggressive. A lot of people jumped in their trades too early. And yeah, that was. And then the other sort of place where people sort of lacked was discipline, which obviously the train challenge obviously helped people instill and further benefit. And when I say discipline, sometimes I saw a lot of people sleeping in, not quite getting up ready to do their pre-market prep and things like that. Or, during slow markets, they were sort of forcing trades, this kind of thing, FOMO, revenge trading, and the sort of discipline to stick to their plan was another sort of insight that came away from this that I saw. So execution and discipline were the sort of two main sort of factors that I noticed most traders were struggling during this recap competition.
Yeah, and then in terms of execution discipline, there's two ways we plan to solve that problem. For execution, what we've kind of discovered this month with some people is not everyone has a good playbook, not everyone has a good strategy. So one of our main focuses going into February and so on is we're going to kick off a series for playbooks, right? We're going to show you guys other people's playbooks, playbooks that have worked, mines, other traders, and so on, just so you guys have an idea, like this is an example of a playbook that works. This is an example of a drawdown a playbook has went through because a playbook isn't always going to be right. And then from there, it goes on to the next part, which is obviously the execution, the position sizing, the getting in at the right time, hitting your stops, managing your risk the right way. Those two things going hand in hand, obviously result into you sooner or later making money.
Yeah, yeah. It was, and yeah, yeah. It was a, but so what you guys have obviously taken away from this is you guys have obviously built, amazing habits, you've gained valuable insights, and see quite a lot of people are asking to join. So obviously we are actually going to do another one of these recap competitions. So what I'm going to do is I'm just going to put the link for the Discord in again for you guys to join, so you can enter February's one. February's one, we're going to do same prizes again, Uma.
Yeah, I think we can do the same thing. The February one, I'm gonna join as well. Yeah, the February one, I'm gonna join as well in terms of, my trading, just to give you guys context in my trading, and we'll go into that in a bit. I don't actively trade every day. For people that have been following me, probably know that by now. I look for a few key days, right? And with few key days, out of like give or take 20 to 22 trading days, I'm looking for 5 to 6 really good trading days, trending days, and I'm looking to capitalize on that, right? So I may not, go into the market every day with a set of notes. I may not show up every day in terms of looking to, take something away from the market, right? Because what I believe in the market is, hey, not every day, not every week, there are great setups, especially the way I like to trade. So my approach becomes a little bit different, right? And that's once again something I'm going to cover on in a bit.
Yeah.
Yeah,
I
FOMC earnings, like we have earnings season coming up. This week we have a big earnings season as well. So these things kind of play a big role in the market. Also, as you guys saw, Trump being back in office, he sometimes creates good volatility in the market, and sometimes he creates a lot of uncertainty. Um, there's ways to trade that at times, and then sometimes it's better off to just sit on the sidelines.
Yeah, Trump markets are wild. We're in for a crazy ride for the next 4 years, I think. I remember the last one. The last one was very interesting. So I'm kind of excited for it, to be honest. But yeah, going back to what Umar said as well, I also personally, I'm gonna enter this one as well. I'm gonna try to hold myself accountable with you guys as well and post every single day. But again, same as Umar, I do not take a trade every day. So for the last week, I haven't taken a trade actually. But yeah, um, So obviously, just to wrap up this month, obviously you guys are obviously, you've all gained valuable insights. You built and we've built this sort of community now, which obviously we want to grow into the next month for the next recap competition. I'm just curious for those of you that sort of did enter, if you guys are in here and you're in the chat, what was your guys' biggest takeaway from this month's competition? If you can drop it in the Q&A, just so I could take, sort of build that out and have all your guys' thoughts. Won't let you join the Discord. No worries. Would love to. Not following stop loss. If you want to enter the competition, guys, we're going to post instructions about how to enter, but you just need to join the Discord and we'll post an announcement in there soon. Yeah, this webinar will be recorded. So we can see the challenge in the daily, weekly, and monthly recap competition in the Discord. You can see that. Accounting for the volatility. Yeah, there was a lot of volatility this month. Daily stop loss, revenge trading, FOMO, capitalizing early. Yeah, as I said about execution being one of the biggest things. Following your pre-market plan until. Can you see all these things, Umar?
Yeah. I'm seeing all of it right now.
Create a new channel showing the winners. Yeah, we will. So what we're gonna do is we're gonna crown obviously the winners first and second, and you'll get sort of a special badge or in the Discord for obviously winning the recap competition. But as I say, we will post about the winners in a bit, and then we'll obviously announce that.
Cool, cool, cool. All right. So to wrap this part up and just to continue, we're gonna post a poll to go over, hey, these are the two winners, and you guys can decide, and we'll share kind of their recaps and breakdowns. And obviously you guys can decide. By end of today, we'll post a link to join the competition for February. I mean, it's open to everyone, be it you're a TradeZilla user or not. The idea there, once again, is we just want to see good feedback, right? We want to see good feedback from your daily game plans. That's number one. You must have a daily game plan. You must review your trading day trades every single day, weekly recaps and monthly recaps. The idea there is we're not looking for who makes the most money, who's the most profitable. We're looking for who's consistent, who has a repeatable process. And a repeatable process is very important, guys, because if your process is, if your process starts changing in the way you're prepping for the week, prepping for the month, prepping for the day, there starts to be flaws within your trading at that point. So your process has to be repeatable. The playbooks and things you trade have to be followed. So even if, let's say, you have a playbook that, you have a criteria, you have an entry criteria, and you're not hitting it, it's totally okay as long as you're following that playbook for the first month, and we start building into, giving you playbooks and stuff like that too. And then finally, your risk, right? I've seen some traders great at making money, right? But then when it comes to keeping the money, when they have a bad trading day or the market's a shit, because reality is we're gonna have days where the market sucks, they give it all away. Right. And the main idea there with the weekly and monthly recaps is for you to look at that data and go, well, I don't know what it is I'm doing wrong. And as I started going deeper and deeper into my data, I started realizing that these are the mistakes I'm making, right? And that goes on to my next point of the webinar schedule for this month. We are going to share a webinar schedule. One webinar schedule that we're going to introduce is reviewing trades. So if you guys want, I'll be doing a webinar once a month reviewing some of you guys' trades. If you guys have weekly breakdowns, monthly breakdowns, you just post it and we'll pick like 10, 12 people. I'll go through it. I'll give my insight. I'll give my feedback. I do want to give you guys a framework for that as well to be like, hey, post it in this framework so I can easily identify what the problems are. And the people that, we obviously don't pick, they can still see what the process is to identify mistakes, right? So with me, I've seen that with many traders, it's like traders that have an edge, right? This only applies if you have an edge or you have something that works, that you have a way of making money and you've made money. Usually they have 2 to 3 things wrong with their trading or performance. And if those 2, 3 things are fixed, most of the time they start doing really, really well. Like you start seeing a 5 to 6x increase in performance. And those things could be, and if you guys look at your January recap, you'll see Those things could be not being aggressive on the days you should be aggressive, number one. Not being defensive on days you should be defensive. So they start flipping that. When the markets suck, they start trying to trade those days, and then those days they lose money. And then when the markets are hot, they don't really have any kind of risk element to put out in the market to take on new positions or take on new trades. Or sometimes what happens is certain people's playbooks or setups aren't consistent in terms of entry criteria, exit criteria, or sometimes certain people aren't taking profits or aren't hitting their stops as they should. So there's like these, I'd say like eight consistent level of things that people, mistakes that people make. And if you're able to identify those mistakes, it just kind of helps a lot.
Yeah, 100%. 100%. So obviously I can see people are asking sort of Umar, how do you identify an edge? What's your opinion on that? So obviously my take on that is building up sort of data, and I'm very heavy on back testing to sort of prove an edge.
Yeah, I mean, for me, so my I have kind of an interesting take on backtesting, and I've posted this in Discord the other day too. I think backtesting is cool for you to kind of get a feel of what you're doing, and kind of get a good understanding. Now, backtesting, I've noticed for some people can also become a double-edged sword. I think for some people, when you backtest, because A, the emotional element isn't there, you're also able to fast forward really, really quickly, right? So those two elements start impacting your real trading, right? Because when you're backtesting, I think your main focus should be don't look at the P&L, don't look at how much account balance it is, don't look at how much you're up or down. I think just identify the movements and get very accustomed to them in a way like muscle memory. Oh, what happens around 10 a.m.? I start seeing there's a shift in price around 10 a.m. Oh, same thing happens at 10:30 a.m., right? When the market gaps down really, really hard, sometimes you might see an overextended sell-off. Sometimes it may be overreaction sell-off. So you start picking up key points, but don't translate your results into, well, I backtested the strategy and I made 20%, so I will automatically make 20% in the real market. Because in the real market, your hesitation of execution will be there. And also in the real market, you can't skip an hour worth of data in like 2 minutes. So an hour
Yeah.
worth of data requires you to sit there. And when you're sitting there in a trade for an actual hour, you start feeling every little paper cut. So it's just to be conscious of that. So I think when you're backtesting, get familiar with price, get familiar with how price reacts to certain things. And as you practice that more and more, it will start showing in your real trading. So for me, developing an edge comes into identifying number one, what type of trading style or trader I am in that market, right? So, for example, I can't have a playbook that requires me to hold a trade for 20, 30 minutes
Yeah.
where I am now scalping.
Yeah.
Vice
Yeah.
versa, if I'm, let's say, holding a trade for 20 minutes or 30 minutes and I'm looking for a larger move, for example, let's say I'm trading on the 30-minute time frame, I can't expect to go in and out of trades really quickly. So I think the first thing is people don't know what time frame they're trading on. And I'm not saying there's a proper time frame. There's no such thing as the best time frame to trade. But it's like, hey, if you are picking a time frame, you have to understand that your playbook, strategy, setup, whatever it is you want to call it, aligns with with the time frame you're trading, right? So if I'm taking on some scalp trades, right? There's certain trades I'll take that are less than 5 minutes, and I'm looking at the 1 and 5 minute chart. My whole time in those trades shouldn't be more than 5 minutes, right? I know that. I know, hey, these trades, my whole times are not longer than 5 minutes. Even if this trade does go in my favor, I'm not looking to hold longer because I'm looking for that quick imbalance in price. So if I'm
Yeah.
looking for that quick imbalance in price, the number one rule of that particular playbook is not, trade or hold the trade longer than 5 minutes. So that's where time kicks in, right? Second thing, a lot of my edges or my playbooks do consist in what time period I trade in, right? So a lot of my trades are in the first hour. I have a phase where I will trade like an opening top setup, right?
Yeah.
What does that opening top setup require? For me, it requires action in the pre-market. I need to see some sort of action that happened the day before or the session before the market open. And from that session, I will start looking for a price going into a key zone. Now it becomes what is that key zone? And we will go over these um, examples in like a real webinar section, right? For the playbook webinar we're going to kick off this month. But I start looking for real key levels of interest. Hey, these are key levels, and that interest key level could be yesterday's low, it could be yesterday's high that the market gravitates towards. And once the market gravitates towards that level or zone, I'm looking for a trade around there. And once
Yeah.
again, the things I'm looking for in that edge is I am looking at it before 10 a.m. or 10:30 a.m., right? I'm looking at it from around those times. I am looking for the market to gap down or make a move down pre-market and then start having a false move up, because that false move up indicates to me that we may see some sort of rejection on the downside.
Yeah. And just obviously curious, going back to that, obviously we spoke about Trump's sort of volatility. A little sidestep, but is there any sort of major adjustments you plan to make for 2025 now that obviously there's more volatility in him in office? Like, you're going to be more reserved in aspects of trading this year, or?
Uh, so yeah, it's a very good question, by the way. So I think with Trump in office, I think there's definitely, from a trading point, there's different opportunities that present itself. So I'll go back to, prior to 2020. I remember in 2019, 2018, for people that trade options, if you guys remember Amazon, when an option contract was at 35, $40. And then at the same time with other names like Tesla, Baba, and so on, right? So with Trump in office, and you guys have probably already seen in the past week or two, he tends to say a lot of things that cause volatility in the markets, like the tariff thing, right? You see the
Yeah.
market sell off. It happens randomly. So something to keep in mind with him, especially, there's no real sort of anomaly of when he's going to tweet something or say something. Now, if you are able to capitalize on a tweet or move or something that he does in real time, a lot of times, realistically, and I know this is going to sound crazy, and during Trump's last time, this is where I made the most money. I just, depending on what the sentiment is of what he said or tweeted in that moment, I just ride that direction out right away. Right? You go to Friday, right? And I didn't trade this Friday move, but it's like the tariff thing happens right away. If you're able to catch that within that 3 to 5 minute time period, I've just bought puts, to be honest. Bought puts of the
Yeah.
stop and just writing it and just scaling it out, right? Because
Yeah.
market becomes very reactive, and you guys will see this, especially to downside moves. Market moves 2 to 3 times faster on downside moves than upside moves. So if there's negative news, which once again, we're gonna see more of it, right? On an intraday basis, on a weekly basis, try to capitalize that on a news element. Or second, the second thing with Trump in office that I think sometimes makes the market easier, sometimes makes it harder, is there's a there's a very hard switch in sentiment, right?
Hmm.
For example, market can be trending up and market can have a positive sentiment week one to week two. Let's say earnings season strong. Feds aren't going to, increase rates for argument's sake. Market looks strong, economy looks strong. Like things are lining up, and the sentiment can be flipped very quickly, like you guys have seen in the last 2 weeks, where it just becomes bearish.
Yeah.
Right. So with this whole tariff thing, the sentiment becomes bearish. And the difficult part about that I've noticed that happens with many traders, even with myself, is typically market doesn't switch, you know, context so fast. It doesn't go from like bearish to bullish in a short period of time. It takes some time, right? It'll be a trending market for a couple of months, couple of weeks, if so, and then it'll maybe stall out in reverse. With him in office, you'll see that sentiment switches very quick, right?
Yeah.
So if it switches very quick, you have to be able to adjust to that. And a rule I have is a lot of times when I'm trading in a market where the context switches very quickly or the sentiment switches very quickly, I have to have, like, I have a rule where if I have 4 to 5 bad trades consistently, I take a step back and I'm like, okay, well, let me reassess the market sentiment. Am I,
Yeah.
maybe my playbook is good, but I'm trading off the same sentiment that we had last week. Like right now, we have bearish sentiment, right? Market's selling off, market's weak. Great. Now, what if, just for argument's sake, like I'm going into Monday with that idea that the market sentiment, what if mid next week or the week after the sentiment switches really quickly and I'm still trading my playbooks of, trades that are selling off or downside trades or, morning top setups or continuation sell-offs? what happens then? Those playbooks are still good, but the market context has changed, and I didn't pick it up quick enough. And now what happens is I put myself in a drawdown by not adjusting to the market quick enough.
Yeah. That's really interesting. Especially
Yeah.
the thing that you said about something that I didn't actually realize I've not really clocked was the when you said about down moves obviously happen, 3 times faster than buy moves. That's something I definitely need to look into myself. Um,
Yeah, I think it's just because like you guys probably already seen anytime there's down moves, right? I mean, especially if you're trading options or anything in general, you'll significantly make a lot more money. Like you
yeah,
look at Friday, right? Fridays, the move happened on the downside. Look how quick that move happened, right?
yeah,
Because
it's crazy.
the element of downside moves is stops get triggered, right? Number one, panic selling leads to people selling quicker. Short selling kicks in, right? It imbalances things way too harder. It's the same thing on the upside, because we start getting a short squeeze in certain situations, but on the downside, we start seeing a sell off 2 to 3 times more likely and more accelerated than an up move.
Yeah, interesting, interesting. And sort of relaying that back to obviously the issues that we had in the recap competition this month. What do you do to sort of in have you got anything that you do to sort of instill discipline with your like trading routine that helps you stay accountable or
Oh, I think there's a few truths in trading that are gonna stay no matter what. We're all gonna go on tilt. I go on
yeah,
tilt. Everyone in here is gonna go on tilt. For me to say you're never gonna go on tilt, you're never gonna lose money, you're never gonna get undisciplined, you're never gonna, not follow your stop. It's very hard, right? I have days where that happens. So there's a whole framework around it, right? The framework is number one, accepting that this will happen, and our job is to avoid it from happening, right? Obviously, we don't want this thing to happen, but there is still a possibility of it happening. Now, when it happens, how do you prevent yourself from it when it happens, from it blowing you up? And what I mean
yeah,
by blowing you up is like, hey, if I go until tomorrow, and I've had days, right? I've had days last year, I've had days prior to last year, I've had days prior to that where I've been in massive drawdown, I've been massive, like I've hit days where I'm in tilt. And my thing is, when those days happen, as long as I don't blow my account and I'm not over positioned and I have certain rules to protect myself, I will survive to see another day, right? Because what we all want to do here is our goal should be number one. Our goal is not to make money. Our goal, and I want everyone to kind of accept this and make this their main goal, is I want to survive to see another trading day, right?
yeah,
That's it. I want to survive to see another trading day in a way where I don't blow my account. Like, so if you have even $1,000, $3,000, 30,000, whatever it is, you're not putting yourself in a position where you have to fund your account again tomorrow, you blow it, or whatever the case is. So in case of a tilt or in case of a drawdown, you're protected where it's like, what is your max loss per day? Right. So I have a number for my max loss per day. And there's days that I'll go over it, but that's one thing I can control. So if I hit my max loss, does not matter, just walk away. Right.
yeah,
So what I've learned with myself, and I think a lot of people here are on the same page, is when I hit my max loss, majority of days, what works for me is just walk away.
yeah,
My
yeah,
laptop, my computer.
yeah. I have a massive issue with that where obviously I work at my computer all the time. So I
Yeah.
always and sort of tend to look back, and I'm sure a lot of you guys do as well, is take that sneaky peek and then you end up overtrading and sort of going down that way. So yeah, that is definitely one of the best things you can do.
Yeah, I think just because like I'll tell you, my biggest losses came from days where I've hit my max loss for the day. I went beyond my max loss and I sit there, right?
Yeah,
And what happens is when you're already in a big drawdown, let's say you're in drawdown of 30 grand, 40 grand, 3,000, 300, a little bit more doesn't hurt because you already have such a max loss,
yeah,
right? You're down 3,000 for the day. You're like, if I lose another 300, what's going to happen? If I lose another 500, what's going to happen? If I lose another 1,000, it doesn't matter because your loss already so big. Now, the next thing that happens, that 3K loss turns into a 4K, 5K. Next thing you know, you're down 9K, right? Like I had a day, I think 2 or 3 years ago where I hit my max loss. I was down like 40, 45K. And I walked away. I came back and I was like, you know what? I'm not going to trade. And then I took one trade, right? And it was so interesting because I took a trade, it was 5K, I lost 7K, I made 6K, I lost 7K. By the end of the day, I'm like down 90K and I'm like, shit, how,
Yeah.
how'd I build myself into this big loss?
Yeah.
And it just happens because when you're already down so much, small paper cuts don't feel painful to you because you already have such a big cut. And
Yeah.
then, towards the end of at the end of the day, those small paper cuts just destroy you.
Yeah, yeah, it literally felt like you pulled that out of my brain then when you said when you were like you were saying, "Oh, what's that little bit more?" I think that's something that a lot of people do. And I think that's an issue. I know we spoke about it briefly in the Discord the other day about prop firms, but I feel like that's where a lot of people fail on prop firms as well. Where the like say for example the max daily loss is 5%, and then they just keep going and going just to like because they can risk that little bit more because they're like, oh, what's 2%? Let's make it 4% to try gain that back. So yeah,
Yeah.
that is really interesting.
Oh,
Um,
someone, yeah, go ahead.
no, go on.
I was gonna say,
Question.
someone asked me a question, and I think this is a really good thing for you guys to analyze, for February, right? I mean for January. They said I saw one of your trades where you bought 1,000 contracts and you only had a $400 drawdown, right? So one thing I would, if you guys haven't done, go back to every single one of your trades and check this one thing out about all your trades. Okay. And this is going to require some tedious work, but it's going to help you a lot. Okay. I will actually let me I
Do
don't
you
have
want to
the
share?
uh don't want to share, but
Uh,
yeah, I'll share in a bit. But yeah, so go back to all your trades and look at number one, what did you go into drawdown immediately? So if you bought a stock at 10 or you got into trade, right? Did you go into drawdown number one? That's number one, right? Uh, Number two is the trades you do go into drawdown, what is your end result on those trades? And then number three, the trades you don't go into drawdown, what is your end result? So I'll give you an example, right? And I've seen this pattern happen so many times. I've seen a pattern where traders that go into immediate drawdown the first 5 minutes, right? Versus traders that don't go into immediate drawdown, and it flips depending on who, you as a trader, you as a person. So people that go into drawdown right away have a harder time in maximizing the trade because they've experienced red. And then after 10, 15 minutes, the moment they go to green, they're like, okay, finally I'm out of it. Let me go green, let me sell. So what happens
yeah,
in those situations is they're not able to maximize trades. They're not able to hold trades for their expected move, and they take profits too early,
yeah,
right? Vice versa, on traders that don't go into drawdown immediately, they're able to maximize the outcomes a lot more because they're in more control of the trade. Now, if you guys go into your data and you look at that, the two ways to split that up is okay, well, when I am in drawdown, how do I respond? Okay. When I'm not in drawdown, how do I respond? And then also, what is the move of that trade when I sell in drawdown? Right. And I think when you realize that, what you should do moving forward going into January is when you do go into drawdown, first identify your thought process during drawdown. So one thing I do that's helped me a lot, especially when I'm in big positions, right? And I think this has been probably this has probably been the best way I've been able to scale up my trading, right? Because the moment you scale up your trading, the first thing that happens is you already know that your risk is a lot more than typical,
hmm
right? So it's let's say you're trading two contracts, you go to four. Let's say you're trading 10 contracts, you go to 20. Let's say you're trading 1,000 shares, you're going to 2,000. Let's say you're risking $500, you're risking 1,000 now, right? That number mentally becomes so much larger to you that every move up or down, just you feel it. So what I do, or what I still do till this day, is I like throughout the trade, I will talk to myself about the trade, be it me
yeah,
writing it down, right? Like I have notes. Sometimes it'll be like on a piece of paper. I'm just writing it down, and I'll say the trade's holding VWAP. We got a little pullback. This is why the pullback happened. The trade accelerated down really, really fast. I don't see a reason for me to sell. Like I will talk about the trade as if I'm not in the trade. that has helped me look at trades from a subjective point of view and not from a point of view of where I'm in the trade. Because
Yeah.
as humans, the moment we're in a trade and it moves up or down or against us, or even in our favor, we do get locked into the idea of we need to sell, we need to exit, we need to do something to capitalize on this move or cut our losses. So for me, just cutting that out, writing it down on a piece of paper, writing it down on my laptop, uh, talking about it out loud, reading the tape for argument's sake, uh, those things help me just kind of push away from the other side of that trade.
Yeah, that's wow. Yeah, that's some really good advice. So having that sort of mental conversation with yourself throughout the day sort of helps you stay grounded and sort of stay away from that.
Yeah, and you know what a good thing is for people that go on tilt and just like you're like, hey, I have such a and I've seen this happen, right? Which is interesting if you go through some of the reviews. Some people have such a good game plan. It's like very well structured,
Yeah,
very like you're like, wow, this is really good. And then you look at their trades and it's like there's no way this is the same person.
yeah. It's like they've entered here, 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 here. And the game plan's like, no, you entered once here. Yeah,
Right. And that's very normal. I'm not saying it's okay, it's normal. And the idea there is how do you fix that? Right? Because now if you have a good game plan and you go into the market and you're a completely different person, there's two ways to fix that, right? One way to fix that is have 5 minute check-ins. I
yeah.
think every person that struggles with that have 5 minute check-ins before you start your trading session. Every 5 minutes, put a timer on. Whenever the timer goes on, every 5 minutes, write down your thought process. Write down what you're feeling. Write down what it is that you're seeing in the market. If you're in a trade, write down about that trade.
Hmm.
Go back to those check-ins after you're done and look at your thought process.
And just curious, when you're doing those check-ins, if you notice something sort of irregular on that check-in, would you then act on that? So, say for example, you noticed that you were sort of going on tilt in your check-ins. Is that you just stepping away at that point, or do you sort of?
Yeah. So two things happen, right? So, and I've seen this in many, developing traders where one thing that happens is in real time, you're in tilt
Hmm.
and you're so in tilt where you're like, okay, so I'm gonna get myself out of tilt, and I don't think that's the approach. The second approach, which is the right approach, you start writing, and you're like, I just, feel like everything's going against me. I can't execute or whatever it is that you go down. Just taking that 10-minute step away from your screens just for that moment and coming back helps so much. That's
Yeah,
why the way I've broken my trading down, which has helped me a lot, is so I trade from 9:30 a.m. Eastern time because I trade the US markets till 11 a.m. Eastern time, right? And I have my trading broken down in 30-minute intervals. So like every 30 minutes is one trading session for me. So
yeah.
10 a.m. is like the first quarter. 10:30 a.m. is like the next quarter, right? And then 11 a.m. is like the final quarter, if you want to put that, right? And in
Hmm.
between, I break it down in 15 minutes. So I have 9:30 to 9:45, and then 9:45 to 10, 10 to 10:15, then 10:15 to 10:30. Now the reason I do that is for 2 points, right? Number one, we have something called initial balance, which is around 10 a.m. and 10:30 a.m., right? Very two important times. Number two, at 10 a.m., we start getting a lot of economic data. 10 a.m. is also a lot of times where big money starts making moves. They'll start selling positions, they'll start going long. A lot of different things start happening around 10 a.m. and 10:30. And just for context, if you guys do trade ES, NQ, or even stocks, Tesla, Nvidia, whatever, just look at those times and you'll see that around those times, new orders do start coming in, volume does start surging in. You do start seeing the market start shifting, right? So when I break it down into those components, right away, one session now becomes 3 sessions for me. Those 3 sessions now become 6 sessions for me. And the reason that one big session breaking it down to three mid sessions and 6 sessions becomes easier is because I can reanalyze positions a lot quicker. I can
Yeah,
reanalyze trends a lot quicker. So I might start the day looking for longs, right? At 9:47 to 10:10 or 10:15. And the market may not give me longs, and I'm able to really switch my bias for the day with new information.
yeah.
right? Because I'll start the day like, let's say, thinking long, I'm gonna go long, but obviously in different contexts of the market, market changes, market has different, things that come in that it's impossible for us to predict or catch. So when that changes, I'm now looking for that change to happen. And if that change does happen, because I've broken it down into quarters and time intervals, I'm not locked into one large session.
Yeah. I'm 100% going to start doing that. That is really valuable. That's yeah. So we've got another question here, which I'm quite interested to sort of get the answer for. It was, let me just find it here. 1 second. Oh, it's completely gone now. What do you think about the psychological pressure that social media experts and traders are to be more specific when people post profits and promote their groups, self courses, etc.?
I don't know. I think trading on social media has gotten really, really toxic and really bad. Um, just my opinion. I think it's gotten really bad, really toxic. There's a lot of bad information out there, and when I say there's a lot of bad information out there, it's like I don't know. I saw someone yesterday on Twitter say, I can predict the market at 100% accuracy at all times,
Yeah, yeah,
and it's just like it's impossible. Like just logically speaking, there's so many unknown things that happen in the market that no human, no AI, nothing can predict. It's impossible. That how will anyone with 100% accuracy predict what is happening in this giant game with unknowns, right? So those things I think do and can start influencing you in a bad way, where it's like, oh well, this guy turned this dollar into this many hundreds of thousands of dollars, whatever nonsense there is, it's not real. And I don't think that's trading, right? I think if those things get to you and they start impacting you and start bothering you and like start messing with your timeline of trading,
yeah,
just I don't I think just at that point just get off social media. I think if those things do bother you, just get off social media, disconnect from it, just focus on trading. The right proper like and that's where like my idea of prop firms, I think I don't even like calling them prop firms, like funded companies, they've they've messed up the
valuation
psychology of a
firms.
lot of they've messed up the psychology of a lot of traders because they've become slot machines and gambling machines,
Yeah,
right?
yeah,
And they've created these bad habits, right?
yeah. Yeah, massively. It's like it's where it's a lot of people see it as, if I make this 10% goal there, I've got this 200,000 account and then I'm going to make 20 grand next month. And it's just not realistic.
Yeah, it's just it's hard. The thing with trading is this, right? I think anyone here that is like, hey, I want to become a profitable trader and I want to make this a career, making it a career is very different than like having 1 or 2 good months, right? And I think having 1 or 2 good months is like playing the slot machine and trying to hit big winners and just kind of not doing it the right way. I think if you want to take trading seriously, give or take 6 to 12 months is what it's going to take. You have to go through a development phase. No matter who you are, every person has to go through a development phase, and you're going to go through a development phase over and over again. Every time you size up, every time you enter new markets, you're back into development phase, right? And I think it's just putting yourself in a situation to just consistently improve, consistently reevaluate how you need to get better, and just cutting out, I guess, the noise from social media because it's not really healthy.
Yeah, no, I completely agree. Um, Another sort of question that asked was so what do you think is the number one thing that will take your train to the next level? So let me rephrase that for you. What's something for 2025 that you think would really help a lot of people to focus on this year?
I think for 2025, as I said before, it's context with, I think realizing that the markets, if you have traded the past 4 years, that the markets aren't the same as last 4 years, right?
Yeah,
Administration, it's not just a new administration, it's Trump. And I think trading in the Trump is very, very different.
yeah,
Uh, you can have a great game plan. You can have a great game plan going into the day, and at 11 a.m. He says something about doing something to China,
yeah,
and some trade war happens. Your
yeah,
your long game plan is no longer a long game plan anymore,
yeah. And
right?
yeah,
Yeah.
Curious how you sort of when you are obviously dealing with all these trades, like do you ever get sort of feel burnout, and then like how do you sort of handle that?
Yeah, I mean, I think burnout in trading is very normal, and I think it'll happen to everyone. I think early on it doesn't happen because everyone's so excited about trading.
Yeah,
Uh, but I think when burnout starts happening, it's very simple. Just step away from charts, right? And I think it's a very hard thing for people to do. Like, don't trade a day, don't trade for a week, don't trade for 2 days. Just if let's say you're going into the weekend, Monday, Tuesday, take off. Like I haven't taken a single trade in January, right? For a lot of different reasons. One, I just from October till December, I've essentially traded aggressively every single day with a lot of size, a lot of ups and downs, positions fluctuating. So going into January, I consciously knew like, hey, I want to take time off, right? I want
yeah,
to step away from charts. I want to reset. That's number one. So that was one reason. Second reason, going into New Year, and I'll share my screen in a bit and talk about that, is just for me, starting the new year off is always a little bit difficult just because mentally I'm at zero, and because I'm at zero mentally, finding the one, two, three good trades and finding momentum is always hard. And then the third reason I didn't want to take a trade is because as Trump was going into office, I had certain positions and certain things I wanted to take onto the markets, but I was unsure. Some of them worked out, some of them didn't work out. And it was, hey, we get a hype till he gets into office. He gets into office, we start seeing a shift in the market. And that's kind of what happened. I just obviously haven't capitalized on it the way I wanted. But for me, it was just a lot of smoke is in the air. Let me let it slow down and find good opportunities. And
yeah,
I think majority of people here, and I promise you, trust me on this, you are better off not taking a trade for 2, 3 weeks and staying cash in a uncertain mental position you're in or uncertain market than to put on a trade and not only lose money but destroy your mental confidence. Because there's two things that go hand in hand that's very important, and I don't think people understand the second part. Number one is you have financial capital, right? So if you have a $10,000 account and you lose 3, 4 thousand, you're in drawdown, you lose financial capital, right? But what happens when you lose financial capital is if you lose enough, you destroy your mental. And what I mean by you destroy your mental is you lose confidence, you think your strategy or approach doesn't work, you're unable to size accordingly, you're unable to execute because you double guess everything.
yeah,
And that could have all been avoided because you just traded a terrible, uncertain market.
yeah, yeah. Wow. Okay, that's interesting. Um, do you guys have any sort of other? I'm just seeing here the questions. If you guys do have a question, obviously go ahead and ask it. T- one that we've obviously sort of focused on in community, this sort of recap competition was obviously loneliness in trading. Do you ever sort of experience like the lonely side of trading because you don't really speak to anyone else? Someone asked, how do you handle loneliness back in your early days and how do you manage it now?
Yeah. Yeah, I mean, I think the early days is probably the hardest because uh not many people are trading. I think nowadays with social media, that's the other pro of it. That's a pro of it instead of the con because there's more traders now after 2020. I think you can definitely make quote unquote more friends in trading space. But it is one of those things that's I guess a little bit more difficult. Yeah, but I don't know. I don't think I've ever really processed it as I guess feeling lonely in the journey. I don't
Yeah,
know.
yeah, yeah. That's fair enough. What other questions have we got here? Super critical. Someone asked how you go about. So obviously online, you obviously speak a lot about sizing into your sort of A plus setups. What's your sort of approach going into that?
Okay, yeah. So sizing. So there's two things about this, right? Because I have to be very careful on how I explain this because I don't want people to not understand it the right way. You will make the most money in trading when you know how to size accordingly. Okay?
Okay.
If you keep your size consistent, you will not make a lot of money. Okay? Let me just explain this fully. Don't stop there with the thought, right? If you are a developing trader who has not had consistency for more than 6 months, you should keep your size consistent. Number one, that is a given. Like no matter what, you should not switch your size accordingly, right? As a developing trader, if you're risking $300 per trade, you should keep it at 300. You should not increase it. You should build uh, playbooks that are repeatable, that you have seen over and over again. You should be able to handle bad markets. You should be able to handle drawdowns. You should be able to handle red days. You should be able to handle when you go on tilt. These things are old things you have to go through. You cannot skip that. No book, no education, no Discord, nothing will teach you that except you going through it. While you're going through it, once again, your risk has to be very consistent. Now, give or take, let's say 6 months later, a year later, and you've kind of overcome this period, this is where you have to know where to take the right bets. Now, what do I mean by the right bets? So in my trading, my risk now is not consistent. For the past X amount of years, my risk is not consistent. I don't go into every trade with like, I'm going to risk 5 grand. I'm going to risk 10 grand. I'm going to stay at this risk level. My risk becomes very contingent on number one, market conditions. Number two, where I am in my trading career or trading moment for that year, right? And how well I've been trading.
Hmm.
So I'll give you guys context. I haven't taken a single trade yet, and you guys will see like the first trade I take, I'll post it in Discord with you guys. It's not going to be a big size trade, regardless of how good the setup is, and I'll tell you why. I can have the best setup. I won't go into my first trade risking 150,000 or $200,000. Just won't happen. The reason I won't do that is because let's think about this, right? Imagine the first trade of the year I risk 200,000, or let's say I risk 100,000. If I'm right, I make 3 or 400K or 200K or 300K, right? But if I'm wrong, what happens? I'm in an immediate drawdown of a lot of money. Mentally, now you're playing catch up with the market. Now let's say I have a second trade. I'm down 150. I have a third trade. Next thing you know, I'm down 220 to start the year off. I'm in a very weird psychological spot now. I'm like, shit. I'm like, can I get myself out of it? Yeah, but also everyone here knows this. When you're like in getting out of drawdown mode, it's like a really tough, never ending,
Yeah.
right?
Yeah.
So me going into the year, I'm not taking big trades to where I'm taking big losses. Now, let's say if I take a trade and I risk 30K and I'm up 40K and it's like a 1.2 hour trade, I might take the profit.
Hmm.
Why? Because in that moment, me locking in 40,000 is more important than me hitting my max profit.
Yeah.
Same thing when I'm on a losing streak and let's say, or if I'm in a drawdown, I see a trade with a little bit red, a little bit green, and it's a okay trade, I'll take it. It may not be the best R, but I'll take it because in that moment, I'm like, well, I could use some green. That's number one. In that moment, it'll help me get out of drawdown. In that moment, it'll help build momentum. It'll help build confidence. On the flip side is let's say my trading is going really, really well. Every trade that I take is not the best trade. Some are like a B plus setup where I'm like, oh, maybe it might work. It's not the best. I don't know how I feel about this trade. And some trades are like, okay, well, this is a really good trade. And what kind of deciphers between a really good trade and like an okay trade, right? So I think a really good trade, at least for me, is like, okay, well, number one, for me personally, I have a level of cushion in the market that I can put on more size. That would require me to, obviously allow me to put on more size because I also have to be allowed to put on more size. Like that's a framework everyone here has to operate off. Because in trading, we don't have a boss. We can kind of think we can do whatever we want, but we have to hold ourselves accountable. Like, hey, am I allowed to put on more risk? And I ask myself that question in a lot of trades. I'm like, am I allowed in this moment, in this month, in this period, in this week, during this phase, am I allowed? And sometimes it's a yes, sometimes it's a no. If it's a no, it's out of the equation. If it's a yes, then it goes on to the trade. Looking at the trade market conditions, right? I'm not going to go into an uncertain market where, like, let's say we have FOMC happening, like on Wednesdays, not every Wednesday, but when FOMC event happens on that Tuesday and Wednesday, markets kind of trend sideways. I'm not
Yeah.
going into that day putting on size, just not
Yeah.
happening.
Yeah. Yeah.
Why? Because there's a lot of cash in the sidelines. Market really doesn't move much. If you look at maybe, yeah, if you look at the 11 past events of the FOMC, you'll see maybe one or two of them that the market really gives you something.
Yeah.
So from a probability point of view, to me, those days, even if it's like my best setup, market does what my best setup's doing, I may not go in with size.
Yeah.
Right now, you flip that to a day where FOMC is out the way, earnings is out the way, market has clear direction, market starts trending, be it up or down, and I start seeing setups and I have the cushion and I have the confidence of consistency in the past few weeks. That's where my size and my hand will increase.
Yeah, that makes a lot of sense. Yeah. Much
So
more.
though it's a combination of so many different things. You can't just say, I'm gonna increase. You also can't say I'm gonna increase size because I've been on a winning streak. There's
Yeah.
times I've been on a winning streak, and I kid you not, I've taken a week off. Why?
Just
Because and I know it sounds crazy, and I'll tell you why. Because in the past, I've had weeks, and I just the way when you're in a losing streak and every trade you touch, it goes against you. There becomes this like momentum of like almost every trade you touch works in your favor, and it works for a
yeah.
really long time, be it a few weeks, and then you hit a wall where at least me, I hit a wall where I'm like, well, I know what's happened in the past, right? I've gotten burned in the past where I've had a winning streak. I think it was like 2017 or 2018. I had a winning streak for like 4 or 5 weeks, really, really good. And then I had 1 week where because that great winning streak was so phenomenal for me that in that 1 week after a 4 or 5 week winning streak, I gave everything plus more back.
Yeah. I've done that before. That is the worst thing to do.
Right. So it's like when you're in drawdown and you're in like this big drawdown level as a trader, or not even drawdown, when you're in like a up moment in trading, your confidence gets, elevated, your position sizing gets elevated, and you start getting blinded. It happens to me even now. Like there's times like I'll take 3 trades, which is why I have a cutoff on my trades. I don't try to go more than 3 or 4 trades a day. I'll have trades where I hit 1, 2, 3 back to back good trades, and then in the past like my fourth or fifth trade because naturally you're more confident and you're like, oh well, I should take on another trade and I can make this much, I can do that much. That third or fourth trade blows you up.
Yeah, always. Okay. Interesting. We're getting sort of into sort of an hour now. Do you want to carry on with a few more questions, or do you want to talk about your game plan for 2025?
I'm gonna go into a little bit of my game plan into February, right? So I'll share my screen a little bit. I'll start writing certain things down, and I think from writing stuff down, I'll kind of break it to you guys. I'm gonna make a week game plan. I will share it with everyone by end of tonight. Uh, so here I'm gonna let me just open up my screen really quick. Keep it at 10 minutes, and where is it? Boom.
Just whilst he's doing that, yes. For the people that are asking, this is being recorded.
Just yeah, Zoom always just gives me a little bit of a problem. Sorry.
Sure.
All right, cool. I think we are good. Okay. So here's things that I'm gonna give everyone to kind of work on. Can everyone see my screen?
Yep, we can all see.
All right. So I'm gonna go over a few things here, right? And I'm gonna go over this and just kind of walk through a few things. So here's all of kind of the past month, right? As you guys can see, going into just the year, right? Very, we have very short-term directional markets, right? Year starts off, kind of has somewhat of a move up, accelerated downside move, rally, big gap down, huge day, and like kind of pretty flat with wide moves in the past few days, right? Some days, as you guys saw Friday, we start having these big accelerated moves down, right? And these are days where realistically, if you're able to capitalize 1 day, 2 days, you're able to really, really do well. Then you go into like Nvidia past week. If you guys, obviously have seen the news, you'll see relatively something very similar. You'll start seeing those 1 or 2 day identifiable days or moves and so on, right? So the first thing is understanding, as I mentioned, context. So it's like when you're planning your months and you're planning, all your things, there's a few things you want to kind of focus on, right? let's say Feb planning, right? So you wanna try to understand, you want to work off this framework, right? One framework is once again, I haven't traded in January, so it's hard for me to give you that. But what was going over your January trading month, right? So this is number one. So let's start like breaking down January trading month, right? Number one, we want to focus on inputs and not outputs. Okay, so everyone here, if you have done your trading month recap, focus on inputs and not outputs. What do I mean by inputs and not outputs, right? So when you're looking at inputs and not outputs, you want to look at what are things that were in your control and what are things that were in your control that you have done well, right? So for example, if you have certain inputs and not outputs, I mean outputs are money, right? Or outcomes, outputs, right? And inputs could be game plans, daily game plans. So my first question is, out of everyone here who has created daily game plans, how accurate were your game plans? How accurate were your game plans? Right? So my second question is, were your game plans, were they were when you go back to some of your game plans, were there bias? Right? And what do I mean by bias? Bias could be, hey, I went into a trading day and I was looking for longs and I was stuck on longs, right? This is what I was stuck on. Now that when you do that, you start creating a game plan that's very biased. You want to start going away from having a biased game plan. And this is something for you to review for last month and to look into, where the way I look into the market and the way I like to create game plans or structures for myself is I like to have if then situations, right? So I go under certain expectations that I know nothing, right, at all, and that the market is fully random, right? That's the market. No matter what, market is 110% random. And as I know nothing in the market's random, what are the scenarios, or the situations that can happen, right? What are the situations that can happen? What are the scenarios that can happen? And it would look something like this, right? So here, I will go over something with you guys, right? And because a lot of it starts with the game plans, right? So if I look at this game plan and I go into Monday, right? I will say what happened in last week's trading, right? With the market. We look at last week's trading, pretty flat with Friday's sell-off. As you guys can see, huge sell-off on Friday, kind of went into the same zone again. As we went into the same zone again, we went to sell off on Friday, right? So it'll go on from last week to yesterday's trading day. Yesterday's trading day. What happened, right? And from what happened yesterday, there's no bias there. It's obviously evident. We saw sold off due to X, Y, and Z reason. This is why the market sold off. As the market sold off, I want to then start identifying where are the places where market got involved, sellers got involved, buyers got involved. Like, where are those areas? Where are those zones? And in just a simple supply or support resistance level, you can get ranges, right? Did my screen stop working?
No, we can see still.
I don't know why it's not letting me write on this. Yeah, it's not letting me write on this. But what those levels could be is it could be ranges. Like, for example, if I go into Thursday, right, and this is Friday, my ranges right away is like, what are the ranges for the session before? This is like ES highs, ES lows. Where did ES open, right? Same thing here, the low, the high, where ES opened, right? And typically, if we're in that similar area, we start getting a range bound market. If we break out of that area where we did here, we start moving in a trending market. So Friday, we did go into a trending market until news came in. So the news is what drove this all the way down. And this is where we bottomed, right? So when I'm planning my next week or my next day, I want to understand, especially for the context of the market, number one, what happened here? And then number two, where did it happen? Where was that activity involved, right? So when I look at this, I understand that that activity was involved here. You guys can see the huge sell-off, huge candle, a lot of spike in the move down, and it consistently sold off, right? Because sometimes what we'll see is we'll see like a sell-off, and then we'll see an area where buyers get involved, and then as buyers get involved, we'll like start seeing the market close like that. Here, that didn't happen. we just saw a continuous heavy sell-off. So that's something, in my game plan for the next day or next week is something I have to keep in mind, right? If I keep that game plan in mind, I now understand the context, right? Hey, this is the context. This is why it happened, where it happened. This is where it went to. And then when I start looking at the past week, data and past week activity, I start understanding where are areas where buyers may possibly come in, right? Where are areas where buyers may step in? Where are areas where they may start buying up, or stepping into the market? And then second, does this event from Friday, is it still a negative event in the market? And if it is a negative event, am I going to go into tomorrow and see a sell-off, or am I going to see a bounce play? That's where, when you're creating game plans and when you go back to your game plans, you have to look, was there a bias? So if I go to NVIDIA, by the way, I don't know why it's not letting me write here. Why is it not letting me write? Yeah, it's not letting me write for some reason. But if I go into NVIDIA and you guys saw that sell-off, the way I would position that is like, okay, well, Friday, we got a big sell-off. This is the reason that happened. We're going into Monday. We still see negative sentiment, which may be seeing the market maybe make a move down. As the market is making a move down, I know that around 60-30 is like a big supply zone. I know there's a lot of interest at that area. Now, if we open at 60-30, my game plan comes into identify what happens at 60-30. Identify if there is strength, if there is selling pressure, or what is happening. I'm not going to go into tomorrow saying, well, I'm going to go long because I think market's oversold, or I'm going to go short because I think market's going to go lower. I want to confirm that with levels and confirmation around those key points where buyers and sellers may get involved. So I'm like, hey, I think buyers and sellers may get involved around here. If they get involved here and they're able to hold this area, they're able to go long here, but we start seeing some positive delta, well, this is the area I would like to get involved as well and go long. Now, if they're not able to get involved here, that's where the flip side comes in, right? So it's basing a lot of it from two different points of views. So you're not so biased in one direction. Because a lot of times when you're so biased, like it's gonna sell, you build a game plan to go short, and the next thing you know, you get crushed. Right? So game plans are like one of the inputs. The second inputs of things that we can control is playbooks, right? Question to everyone, right? How well did your playbooks work? Your best playbook, right? Worst playbook. And then my next follow-up question is why? Okay, why was your best playbook, right? And the answer that you don't want to have, and avoid this answer. Do not say my best playbook was my best playbook because I made money. Making money in the market at times is very random. Let's all accept that. There's many trades that I made great money, and I promise you, when I go back to it, I'm like, holy shit, I have no idea that was not going to be repeatable again. So we want to eliminate the idea of like, I'm green or I made money. Making money is good, and that gives a check mark. So if you have a playbook for last month, and let's say, for context, let's say you took 2 trades. 2 trades is not enough data on a playbook to make it good or bad. Right? That's not enough data sets to say it's a good playbook. Right? You want to see, well, what were my entry criteria? What were my exit criteria? Did those entry and exit criteria actually hit? Or was it me just randomly making up whatever I want to make up? Right? Because if you guys go long enough in, let's say, 100 trades, let's say you just wake up and you take 100 trades in the next 30 days and you randomly buy and sell, I promise you, out of them, 20 to 25 of them, you'll make money. Like 1000%. It's a probability game. You will make money on 20 to 25 trades, 100%. Doesn't mean you'll be profitable, but you will have a 20%, 25% just randomness. If it's purely random, you'll make money. Now imagine you do that and you go, well, these are the great playbooks because they made money. Sooner or later, that's going to burn you. So the flip side of that is, I don't care if I made money here. I want to know if my process is, once again, repeatable. Once again, does my process of entry and exit criteria make sense? Was I able to read the market / play well enough? And can I do it again? right? Can I read that the market opened up really, really weak and it sold off? Was I able to read that? Was I able to read that we went into a supply zone, and in the supply zone we saw an increase of buying pressure and buyers stepped in? Was I able to read that? And the worst trap for you to get caught into, and I see so many people get caught into this trap, is your ego of like, yeah, I read that. I'm so good at that. Like and I'm saying it for myself. Like I have had days, I swear, like no joke, where in the moment I was like, oh wow, great trade. I go back to it and I'm like, shit, I have no idea why I went long. Right. And doing that will allow you as a trader to kind of avoid the stupidity in trading and avoid making repeatable processes, right? And the problem with repeatable bad processes is once you have one or two bad trades and you've made money, you think you have to do the same thing to get the same outcome, but that outcome was random. And because that outcome was random, long term you won't make money. So game plans, playbooks, and then the next one is your risk. We can control risk. This is a place we can control, right? We can control max size per trade. We can control, how much we will risk, contracts, daily loss, etc. We can control that. You can go into a trade and you can say, I want to lose $300, and you will lose no more than 300, and you can control that. You can't go into a trade and you can't say, I want to make $3,000, and the market will say, fine, because you want to make $3,000, I will let you make three. It doesn't work that way. So what do? We do the things we can control. The next thing, once again, is risk. We can control risk. If you have a month where you say my max loss per trade is $300, and even let's say you're not profitable, and let's say your trading is sideways, and your max loss for that month per trade is $300, you did a good job. You control something that many people can't control. So that's like the next level of like, how do I control the important part? How do I control the thing that does drive the right things, that does force me to put the proper inputs into the market, and those inputs go into risk, right? So it goes into your game plans, your playbooks, and your risk. These three things essentially will tie into you being able to control the things you can control. Now, there's other things of you having rules, right? Max loss per day, time to trade, right? Setups to trade, markets to trade, securities to trade, time frames that you're focused on, days, defensive days versus non-defensive days, or defensive days versus, let's say, active days or offense days, being able to, identify this, right? These are some of the rules, being able to build a game plan and execute that game plan, showing up at consistent times. So for example, I trade the 9:30 a.m. US market, right? I want to be kind of in front of my computer by 9 a.m. at least for myself, knowing what is happening, having a game plan. I have my 10 a.m. to 10:30 a.m. to 11 a.m. blocks, right? Those are the blocks I like to kind of have. I like to trade from like 9 to 11, right? That's kind of it. Sometimes I'll go a little bit over. These are like the areas I want to kind of focus on. On a day-to-day, I want to review my data and trades and game plan. And I want to have a raw conversation of what I did well and what I did bad. And these are where the raw conversation goes in. A profitable trading day does not equal a good trading day. Vice versa to a trade. Like that's just a rule. Like you guys have maybe seen a video in the past where I've had a really good day, and I'm like, in this video I made 40 grand, and it's like, well, I'm not happy with it. And you might go, well, what the hell do you mean you're not happy with it, right? And it's like, well, I'm not happy with it for a few reasons. I risked, number one, my risk on it was terrible. I maybe risked 35K to make 40K, right? Terrible. My entry criteria never hit, right? I made the trade, but my entry criteria wasn't really good. The market conditions sucked. I was supposed to hold this as a 10-minute trade. It ended up being a 1 hour and 30-minute trade, right? And it just a sideways trade that just sucked the soul out of me. Right. So those are trades where you start looking at it from a raw point of view and having real conversations of what you should do right and wrong. So these are things I think going into like inputs and outcomes. Now going into like planning next month, right? Like at least for me, right? So as context, just to kind of put certain things into perspective, right? I haven't I haven't really taken a trade. I haven't taken a trade this year so far, which is okay. It's not the first January I haven't taken a trade. I think in 21 or 22. I didn't take my first trade until like mid-February. So it's not like the end of the world. I'm not here like, oh man, I haven't taken a trade. I'm so panicked. It's just I haven't taken a trade so far. Now I always say kicking off the month, kicking off the year is always a difficult time because you're starting, you're starting from zero. So because you're starting from zero, my main goal always is I want to build a cushion. This is what my main goal is. And I think this is what everyone's goal should be early on. You want to build a cushion. You want to build a cushion of profits. You want to build a cushion to get away from zero as far as possible. Here's some magic that'll work massively. The further you get away from zero, the easier your trading becomes. Just it's just a fact. You can take the best trader in the world, right? And you put him or her away from zero and you put them in a drawdown, their trading will not be easy. They will have a hard time.
Just a quick question on that. So when you say from zero, do you like reset from zero each month, or is that your like start of year balance?
I'm looking at it from a start of year balance. I think when I do go into the like next month, I do want to take some profits out. I do
Yeah.
want to take something out. I do want to put something out just to not give it away. So for example, let's say you start with 10K, right? And like let's say you start with 10K in February and you build it to 15K, in March, let's say, just for context, right? I think when you go into March, reset your account balance, make it go to 12K. You're still green. You've also took 3K off. And this is something you want to feel. This is for people that are profitable. Like if you're profitable and you're up for a month, trust me, I promise you, this is a big, big thing. Trust me. Don't try to say I want to take a 10K account to a million or 2 million. No, take some money out. Go take $500 out, take $1,000 out, and go buy coffee. Just do something. Just I promise it's like when you feel your trading money come into your bank and it becomes real, it somehow makes you become a better trader. I don't know what the science of it is, and I've seen a lot of people that have done that. They take some money out and then they, you know, it just feels real. Like at least for me, like it just feels real having something come, and it also makes you more protective of the capital because we have this thing in trading, right? And I fall in the trap. It's like let's say you start with a 10K account, and your 10K account goes to let's say 100K, just making a massive claim, right? You automatically go, I'm up 90K, so I can risk more. Okay, so let's put this in theory. Let's explain this, right? Let's try to understand this concept because this concept, in my opinion, is very flawed. So imagine you start trading in January, you're up, your 10K accounts in January goes to, let's say by September, it's 90K. Okay. Now imagine 90K, you say that I am up, or it goes to 100K. Let's just make it even. Let's say in September, you go, I'm up 90K. So because I'm up 90K, I can risk more. Okay. I think that's a very bad approach because if you apply that same theory in real life, it doesn't make sense, right? Because imagine you work somewhere for 9 months, that place paid you 90K, and then you go, because I made 90K and I worked for 9 months, I can now blow it because I'm up for the year. You didn't account expenses, you didn't account anything, which puts you in such a bad mindset. And then that's where, if you notice people that have big moves up, they have drawdowns, is because they get into that mindset. Now, if you get into that point, and now let's say your account's at 100K, and you're like, well, I'm gonna, take 50K off, right? And I will allow my risk to go from $500 per trade. Let's say that was your risk per trade, to, let's say, 1,500 on good A plus setups. This approach will help you become profitable longer. It won't put you in such a terrible mindset. Right. And that's the approach where this number per trade you can increase, not the overall number of like, well, I'm up this much for the year, so I'm gonna be an idiot and just risk it all on a few trades to double it. And then next thing you know, at the end of the year, you're break even.
Yeah, that's awful.
Yeah. Right. So that's like the thing with like the cash element. So in terms of, once again, planning next month, haven't taken a trade, starting from zero, build a cushion, get away from zero as much as possible. I think the further you can get away from zero, the easier, things start getting from you. Start getting for you. And then I think it's understanding some things about the market, right? As I mentioned to you guys before, we're in kind of like an uncertain market, very volatile, right? These are things I know. We have earnings season right now. So this week we have a lot of companies that are reporting earnings. This obviously dictates the direction of the market. Now someone might say, well, why do you care about the direction of the market if you're day trading? I care about the direction of the market because I like to understand the context of where and why we're heading there, right? So for example, if we're in a sell-off market, typically I'm looking for the following setups. I'm looking for continuation sell-offs, right? Sell-offs, continuation sell-offs, or I'm looking for opening bounces, right? Like opening bounces where market opens up because it's been selling off. You'll get the first initial bounce up, or you get that move up, and then you get a continuation sell-off. So my context of that market, my playbooks, my setups, the things I'm looking for are different. Now, if we're in, like, let's say a sideways market is very uncertain. It doesn't know where it wants to go. It's waiting on, the next phase of interest rates, or it's waiting on job reports, or something that it's waiting on. I understand to risk down, right? Play defense, right? And try to identify, a few good setups. Like I'm aware of that. Now, if we're in like a market where we're rallying, right? I'm not looking for sell-off plays. I'm not looking for opening bounce plays. I'm maybe looking for an opening range play. I'm maybe looking for an opening drive play, right? I'm looking for something with legs behind it, some continuation behind it. And I'm aware that in a span of 20 trading days, give or take, we're not gonna get this every day. We're not gonna get this every day. We're not gonna get this every day of the month. This exists in every market. We are gonna have, even if you go to the last month, you'll see like you don't get every session that rallies. You have this one great trade, you get like an opening move here, but beyond that, you'll get a lot of sideways action. Last thing I want to do is I don't want to get caught up in these sideways actions. If I do, start burning money, I want to try to find like setups here. I maybe want to try to find some sell-offs here. And I want to start building from there, right? So in 20 trading days, I go in with the mindset that, hey, out of 20 trading days, I maybe have 5 to 6 good days I want. That's it. I just want 5 to 6 good days, right? And as I start going into a month and as I start looking for trades, when I say 5 to good days, it doesn't mean I'm not trading the other days. It just means that if I'm able to find those 5 to 6 good days, I can execute with more size and more confidence, right? And this is positions where market is trending. And when I mean trending, it can be trending up or down. I want to try to identify that. I want to try to read that. And these are things. What are things? And I want everyone to kind of have this thing for February. What are things I want to get better at? Okay, here are things that I think everyone should aim to get better at. Number one, as I mentioned before, good game plans, right? Good reads of the market, right? That's another thing I think everyone should have: good game plans and good reads of the market, right? I think if you're able to have good game plans and good reads of the market, I think that should help you tremendously. Like that's one part of it. Second is executing your game plans well, right? That's another goal I think everyone should have continuously. And I think the third goal is keeping risk in check. If you keep risk in check, it's gonna solve a really big universal problem that a lot of traders have. It will allow you to see another day in the markets. Simple. And the idea, when you wake up every day and you're looking to take on a trade, the question is, how do I see another day in the market? Right? Do I wake up and do I make sure I survive to see another day? And how do I do that? I keep my risk in check. So it goes into good game plans and good reads of the market, executing your game plans and keeping risk in check. These three things work really well. Now, if you have good game plans and good reads of the market, but you can't execute your game plans well, just you're just gonna suck. Same thing with risk. If you have good game plans and you execute your game plans well, but your risk is imbalanced and it's not healthy, sooner or later your drawdowns are gonna kill you. So these three things have to work very, very well in hand. Now, for people that have problems with like emotions and psychology kills me, reduce risk. Simple. Do a month, reduce risk. Don't look to make money. Don't look to make money. Right? This is a long-term game. Because it's a long-term game, sacrifice not making money 2-3 months than to blow your account in the next 12 months. You decide that. So emotions only play a role because you have a lot on stake, right? You've risked a lot of money, and because you risked a lot of money, that's putting you in a very tough situation. You're like, oh shit, I risked so much money because I risked a lot of money. If I lose, I'll be wrong, and if I'm wrong, I'll lose X amount. That will impact your ability to execute. So if that is the thing, reduce risk, don't look to make money, long term, focus on the following three things. And I think that's where, we're gonna kick off the challenge. Same thing. I do the challenge. It's not, I don't look at it from a challenge point, but I do the challenge things that we're doing are things that you should always be doing.
Yeah.
Like you shouldn't just say, okay, well, I'm done with the challenge, I'm gonna stop. No, like these are things that should be engraved into you. Every day you should recap your trades, and that's why that's why one thing that we said is like this is not only for TradeZalla users, for everyone, because I don't want it to be like, oh well, we're only telling you to do this so you use TradeZalla. No, like don't even use TradeZalla, just do it anywhere. Just recap your trades. If you want to become a profitable trader, you look at any real trading floor, prop firm, institution, they all have data. They all work with data. They all recap their performance. Everyone reviews performance. They have approaches to it. They don't just go and say, well, I'm going to be blinded by everything and just gamble.
Yeah. You got dedicated risk managers stood over your shoulder in those cases.
Yeah, exactly.
Yeah. The challenge is amazing for sort of building those habits, because although there's that incentive there, that obviously the main goal is to, even if the challenge wasn't there, people keep posting their recaps and doing their daily recaps, like, because you say they have to.
Yeah. Yeah, and I think that's really important to kind of put yourself in that situation where you've engraved this into you. You've engraved into doing the hard stuff. And like I know one thing, it's doing a recap or like reviewing your data when you're red is like the worst.
Yeah. Yeah. It's a struggle.
Yeah, it's like the worst thing. But if you can have goals that don't surround money in trading and it's not outcome based, I promise you'll be profitable sooner or later. I've seen like a lot of traders that have flipped that mindset have become so profitable. And I've seen people from 21, 22, 21, 2021, 2022 till now that have made a good amount of money. And a lot of it is just a simple framework. Just kind of look at this, right? I'm just to draw something out for you. There's two types of traders, right? There's trader one that starts in the market right here. Let's say this is like their timeline and this is the other person's timeline. Trader one just tries to make money and their P&L and their everything looks like this, right? They have the points, they make money. So they have short-term, woohoo, I made it, boom, 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 right? But at the end of the year, they're always in drawdown or they're kind of blowing their accounts or whatnot. This is most people. The proper way to do it, and I promise you, in this developing period, 6 months to a year, whatever, don't even care to make money. focus on inputs. I want to make sure my inputs are consistent. I could be red, I could be whatever. I don't care. And then what starts happening is this. This is the same pattern of every single trader that has focused on inputs. This is a pattern that happens. I think there's even some certain people in like Discord that have, have posted that. Like you'll have this initial drawdown period, but the drawdown period isn't so bad because you keep your risk in check. And then as time goes on, you start finally hitting that curve of like improvement. And then once you start hitting the curve of improvement, and obviously when you get to this point, you have your fair share of like you're up, and then you have drawdowns, and then how you handle drawdowns, and then how you handle win streaks, and all that stuff comes with it. And these like parts of the developing trader. But in 2 years, you'll be profitable, where this person in 2 years is still like sideways.
In that boom and bust sort of place.
Yeah, and I'm pretty sure people in here that have been trading for 2, 3, 4 years, because I get messages like, I've been trading for 4 years and like I'm nowhere. And it's like, yeah, well, what have you focused on in the past 2 years? You're trying to focus on making a $10,000 account into 20, 30, 40, 50 instead of, well, I don't care what to turn it in. I'm going to control the things that I want to control, which is input.
I can relate to that so much. I personally wasted my first 4 years as trader one, and then you only start to see that change when you really just take away from the money.
Yeah. All right, cool. Yeah. But that's it from my end. I just wanted to kind of share that. I am going to look at the markets tonight, prepare for the upcoming week. Like I said, we kind of have an uncertain market. The uncertain market does kind of add a little bit twist to it. And yeah, I think, hopefully as soon as I take a trade, I'll give you guys a recap of it, walk you through it, and kind of take it from there.
Yeah, amazing. Thank you so much for sharing, obviously, your knowledge and your time with us today, Umar. That was really insightful. I'm looking at the chat, loads of people really love that. And obviously, I hope everyone's now got a good idea of what they want to do and what they want to work on going into February. Just go for the Q&A quick here. Yeah. People are asking if you're willing to just share that. If you send that, if you just copy and paste that to me or something, or just share the link, I can put it in the Discord for people.
Perfect. I will share that right now.
There's a couple of people asking how to get involved with this month's challenge. Guys, I'm going to link the Discord here again. All you have to do is join the Discord. There'll be further instructions on tonight. But essentially, you just have to post your recaps in the channels. We'll also... You want to, yeah, I'll send out more instructions to that later, guys. Don't worry. Great webinar. Okay, perfect.
All right, guys. Thank you so much, everyone. And yeah, thank you for joining.
Thank you so much, everyone. Have a good one. And I'll see you guys in the Discord later if you're in there. I'll be there and chatting for you guys for the next couple of hours. So see you in a bit.
Thank you.